There's a lot of questions about whether or not the market will push back against a Hassett Fed that could be cutting rates aggressively. What do you make of this debate?
Morning, Guy. I think it's an interesting debate, no doubt. And if you look at the two-year yields, they tell you a big story. Now, what is priced in by the markets? The markets are thinking that the terminal rate is going to be 3%. Well, that is possible. And there have been concerns, as you mentioned, about whether Hassett will be able to drive a consensus within the Fed committee. That remains to be seen. But what we can clearly see already is that the shift of expectations is towards a lower rate rather than 3%. If you look at this September dot plot, what we saw was 5 members already penciling in a rate lower than 3%. So there is already enough people on the committee thinking that we need lower rates, much lower rates than the markets are pricing in. And if we get the labor market weakness that we have seen in recent weeks, it stands to reason that they will go probably push lower rates lower than 3%. But I will come back to the promise that I mentioned earlier, which is the two-year yield. If you look at the two-year yield, given the terminal rate pricing, given Hassett's bias, you could reasonably expect it to trade lower than 350, whereas it is not. And that is the market sending out a clear message that, look, you can have your Fed rate where you want, but you can't have the two-year rate where you want. And that is the message from the markets, that you can't be in defiance of what inflation is telling you. If your core PCE is averaging 2.8%, as it has been this year, and you've got nominal real GDP growth of around 2%, where should your two-year rate be? And that is what the markets are telling us.
Okay, that's interesting. So does that mean that the extent to which lower rate expectations pushes up stocks then is limited?
Well, I think that, stocks are on their own path. There's no stopping them. And the consensus earning forecast for next year is about $300 in the S&P 500. And if you've got $300 in the earnings basket, and what is the PE ratio going to be is the key question. Is there going to be a PE compression or a PE expansion? Even assuming current PE levels, you would think that, the markets are going to go to 7,000 plus. I mean, that looks ridiculous in terms of valuations. And if I'm a value investor perspective, and you've got to think that that's insane, but that's the world we are living in. And the traders are saying, it's as though the traders are increasingly saying, give us a good reason to sell, and there isn't any at the moment. And that's what worries me a bit about the equity market valuations.